Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly mining update. So we welcome back Will from Mining Store. How are you today, Will?
Yeah, very good, mate. Exciting night last night, wasn't it?
It was. So recording, guys, is just 11:40 in the morning after the $1,000 move in Bitcoin, and a bit over. By the time you watch this, it's probably going to be 12, 11 days to the halving. So today's episode is going to focus on that. We're going to look for clues with what happened with Bitcoin Cash, Satoshi's vision, even mention Litecoin, and I know everyone's really excited, and it's great to see some green, particularly heading into the halving. So anything else, Will, just from a general overview from the mining world since we last spoke?
Look, it's been really interesting couple of months across the globe in general. Like equity markets have crashed. Bitcoin kind of took a dump with it, but it's been incredibly impressive how much Bitcoin has recovered. And I suppose when we talk about the cryptocurrency industry, we always refer back to Bitcoin because it does, ultimately determine what goes on across the board. But in terms of the mining, definitely when things were really low, mining returns did suffer quite a bit. We went from our kind of $10 average down to what now is around about a $5 average. But with this rally, things are looking quite exciting. I'll touch on one little point there, that when we do see kind of a market crash, a lot of people can turn their miners off, and the quantity of coins that we're mining actually goes up quite a bit, despite the actual dollar value of all that being lower. So right now, if people are patient and they're mining a large quantity of coins, when we see these rallies, that's where we look to sell off, and our actual average goes up quite a bit. So I'll tap in that later. I'm actually going to go into some charts and some mining strategy, but let's get into the crux of the Bitcoin halving.
Yeah, I'll just say, for people that are watching this for the first time, last month's episode was probably a good one to go back and rewatch, where we spoke about what's happening in China. And there was a lot of unknowns a month ago. As you say, everyone was expecting equity markets to fall, whereas now they've had this big rally and they're at a pretty important point. But I think there's a lot less fear and more certainty about what's going ahead. There's places like Australia where we're starting to ease these restrictions. So a lot of those unknowns, particularly about how mining in China could be affected and whatnot, I think there's a lot more to be, I guess, confident about going forward now, which is good.
Yeah, I definitely agree. I hope that we can get kind of this correlation between equities and Bitcoin to separate here. It'd be amazing just to see it kind of, I mean, there's been no better case for Bitcoin right now, with such uncertainty in fiat currency and global currencies at the moment. So let's see what happens, mate. But just got to take it as it comes, I guess.
Absolutely. I'll just quickly, I've got my Twitter open. I'll show people this chart. I tweeted this morning that Bitcoin's reclaimed the best performing asset this year. So it's up about 20 or 30% at one stage this morning, compared to, bonds and gold and equity. So it's reclaimed its throne once again, trying to be the best performing asset this year and this decade, seeing as we're in 2020. But Will, you've got some slides for us. Let's get into them. Take it away. We've sort of talked about what we are going to cover already. Anything else to add to the first slide?
No, I think that's pretty much it. Like, we'll go largely over the Bitcoin halving, so as we mentioned, and if you want to just go to the first slide now, I'll just do a bit of a recap on the Bitcoin halving. So over on the left there, if people want to pause the video and kind of go over those steps and try to understand in more detail, feel free to do that. But on the right, we've got a chart which basically shows what the Bitcoin rewards have been between each halving. Obviously, the first section being in red, how much Bitcoin was actually released in that section, and then how much Bitcoin's been released as we go on. So just a bit of a recap for everyone. Obviously, we all know by now, and we should all know, that Bitcoin, there's only ever going to be 21 million Bitcoins out there. Basically, when Satoshi made this kind of economic model, he realized that there needed to be a large incentive for miners to actually support this network back in the day. And so the reward per block that was mined was at about 50 Bitcoin.
Yeah.
As we go forward, he had a vision that people would see a lot more value. Back then, obviously, if you were telling your mate you were mining Bitcoin in 2008, 2009, they'd think you're crazy, and hence why the reward was so high. As we've gone forward, that Bitcoin reward has halved every about 4 years. And so now we're currently in a period where we're getting 12.5 Bitcoin per block, and that's about to reduce to 6.25. So to put that into, I suppose, comparison to where the total supply is right now, we've mined about 18 million of the Bitcoin out there, leaves another close to about 3 million Bitcoin to be mined. And those Bitcoin won't all be mined till about 2140. All right. So coming up around the 14th or the 12th of May, it's looking like now, we're going to have this Bitcoin halving. The reward's going to go down 6.25. And what we're actually going to be looking at today is the recent halving for Bitcoin Cash and Bitcoin SV, as that happened on the 8th of April.
Yeah, probably a couple of things I'll just add. This is the problem that other networks face. You've got to offer a large reward to convince people to come over and mine and bootstrap your network. So you suffer this problem from high inflation rate. You're giving everyone all these coins, but then obviously you're sort of diluting that store of value aspect. So it's very hard for other networks to compete. And that's why we're seeing lots of people experimenting with proof of stake and rewards and trying to get them to bake in Tezos's instance and whatnot. So it's very hard to ever get the same scarcity and that I guess, first mover advantage that Bitcoin has. And also some other research that came out, another plan B that he talks about, the stock to flow. He did an updated version of that. I recommend people read that. But it really is the inflation rate. So that the number of Bitcoins, it now drops to about 1.8%. So central banks around the world have always targeted between 2 and 3% as their inflation rate. So now, no matter all these other reasons we have to be bullish, but that alone, Bitcoin now becomes more scarce comparatively to all these other currencies. So yeah, that's the stars are aligning as far as I'm concerned. But let's get into that next slide, Will. And we definitely saw miners having to move around and not mine BCH and BSV because they had their halving a month before Bitcoin's.
Yeah, exactly right. Just before we do move on, you make a really good point there. That is that catch-22. You know, when you first release something, you need a high incentive for people to get involved. But then the coins that become most successful, they then have to, almost chase their tail a bit and make sure they haven't put too much coins out into circulation. So honestly, I reckon Bitcoin's done an incredible effort as one of the founding, I suppose, cryptocurrencies out there. In its incredible vision, the halvings have controlled that supply. But we'll move on right now to the Bitcoin Cash halving. So before we do go into that, I just want to make a point that yes, Bitcoin Cash and Bitcoin SV both had a halving. The charts that I was looking at were almost identical. So I'm just going to focus on the Bitcoin Cash halving and try to give people a bit of understanding of what actually happens both on the network hash rate and price when these events occur.
Yeah.
So obviously on this chart up the top, we can see the network hash rate for Bitcoin Cash. As you can see, that black line there is on the 8th of April where we've seen the halving occur. And as you can see, that network hash rate has gone down drastically. There's about 50% of the network hash rate, which is, I suppose, turned offline. And we'll show in the next slide that that's actually gone into Bitcoin. On the chart below it, we can see that the price, there isn't really much of an effect going on there. We've kind of had this rally going into it. And then there's been what I would call a bit of a non-event. And that's, I suppose, expected. It's just like when, countries are about to release their interest rate decisions, most of the economy or the global economies have already prepared for this to happen. And they're kind of going, okay, we've adjusted our positions beforehand. And so when the actual decision comes out, it's a bit of a non-event. So that's a comparison there. If we want to go on to the next slide there, Alex, I'll go through what's happened with Bitcoin. So
yeah, I'll probably just say quickly, we did have a bit of a run up. So, around $140, I think, to the bottom of the week to $280. So almost a double in that month leading up to the halving. So there was a little bit of excitement there. Then it sold off. And that's kind of similar to what we saw with Litecoin. And I definitely think that traders and whales, they splash around in these smaller coins and try and create narratives. And there's a lot of bots and everything stays very correlated. So it's a lot easier, like a factor of 10 or 20 easier for a whale to really move some markets and get some alts, green and get people excited and increase volume. So I definitely think that you've got to pay attention to these other coins, even if you don't like them or whatnot.
100%. It's so important. You nailed it exactly there. So on this, so back to Bitcoin Cash, obviously, just to put the distinction out there for some people who aren't as heavy into mining, if you have a Bitcoin Cash miner or a Bitcoin miner, they can actually change between the same coin. So it's what we call a SHA-256 algorithm. That's the algorithm that these ASIC miners are built to mine. And so after the Bitcoin Cash halving occurred, a lot of those miners have moved towards Bitcoin. Now, the network hash rate on Bitcoin is substantially higher. It's at about 114 exahash, whereas the Bitcoin Cash and Bitcoin SV hash rates, around 3 or getting close to 2 or 1 at the moment. So there's not too much hash rate that's moved across. Hence, the actual move in our network hash rate in the top chart here for Bitcoin after halving isn't really a factor of what's happened from Bitcoin Cash miners moving to it. It's really more to do with I would say people overclocking their Bitcoin miners before the Bitcoin halving comes along. So say your miner's getting 68 terahashes. If you overclock it, you might be able to get 74 or 75 terahashes. It's not great for the longevity of the hardware, but when the reward's about to halve, you want to get as much as you possibly can. So that's what I actually account the Bitcoin network hash rate going from around 100 to 120 odd at a peak is from people overclocking. Again, around the time of the Bitcoin Cash, Bitcoin SV halving, it's been a bit of a non-event. This is an old chart, obviously, before we had this massive rally come up for Bitcoin. Now we're sitting closer to 8 to 9K right now. But I just wanted to focus this chart more in terms of what happened around that time and not focus what's happened after it. So
I guess takeaway points, there was probably 2 or 3 exahash, as you say. If that had all come over and it had jumped by the same amount, you'd say, that's all those miners coming to Bitcoin. But there's a lot of other factors and other people coming in, and Bitcoin's hash rate has gone up more than that. Overclocking for people at home, my understanding, you can think of that as like driving your car really hard and revving it and whatnot. Over time, it's going to be probably worse for your engine and more likely to break down. Similar concept.
Yeah, really great comparison. Actually, I haven't used it myself, but that's exactly how I would describe it.
Cool. Good to know, Will. I'm learning, mate. You're teaching me.
You're always learning. It's good.
So summary. Anything else to add there we haven't mentioned?
Look, again, a chunky bit of text, and usually in PowerPoint presentations, you don't do this. But again, with the ability of YouTube and being able to pause, I think it's just a nice summary for people to pause on and just go, look, I want to, understand a little bit more of what we went through. Obviously, Alex and I try to keep things quite condensed when we go through and rush things a little bit, I guess. So just put some dot points there. If people want to read over and look at more the numbers of exactly how much hash rate was on each market, and some points that I've made, feel free to have a look there. I've also left the link there to look at Bitcoin network hash rate. A lot of people, even traders that don't understand what the network hash rate is, they don't pay too much attention to it. But it can be a really good way, sometimes even a leading indicator for what's going to happen for price. But that's pretty much all there for that summary there.
Awesome. So this is a chart that's been floating around a fair bit on Twitter. It's sort of showing that as the network grows, the percentage gains of each cycle are going to get less. You can't just keep having 100x returns. So people now sort of saying, well, maybe the next return will be somewhere around 1,500%. That would still be fantastic.
Exactly right. Yeah. So I'll run through this one. I mean, it's always good to have a look at how other people have built charts. But I do recommend for anyone that's kind of serious about their trading, or even if it's long-term kind of positions, try to build your own charts and get a good feel for it. You'll always figure something out or paint the picture a little bit different. So as Alex said, this is a chart that's been floating around quite a lot. You'll see different variations of it, but this is one that I put together. And what really stood out to me was these horizontal lines indicate where each halving has happened, and I've labeled that for everyone. But what we've noticed from the first halving to the second halving, we saw an all-time high of 9,600%. Now, as Alex said, we're not going to keep seeing that as the network grows and there's more volume involved and the market cap grows. But even between the second halving and the third halving, we still saw a max of 2,900%. So about 1/3 of what it was the previous time. From those all-time highs, both times we've seen around about a 50% reduction, and to the point where the halving actually happened. So it was a 50% loss on the first to second, and then from the second to the third, we saw about it. It's right now we're at a 65% loss from that 2018, 2017 all-time high that we saw. So really good just to kind of paint this picture. You also will notice that there's quite a clear pattern that is occurring here. Bitcoin tends to have this massive accumulation followed by a huge decline. We then get another accumulation phase, a bit of a rise, accumulation, and then we take off again. So I think, if we pass on to the next slide.
I was going to say, it's probably, now we've had that bit of a run up, it's probably going to be very close to another 50% loss as it clocks over the halving, which is interesting history, slightly repeating there. And I do think that Bitcoin's got room for one more. Like, I don't think it necessarily has to be 1,500%. I do think we could actually have a bigger return, but let's not get too bullish.
Yeah, exactly right. It's always good to, underestimate, I guess, and then be surprised if it does go longer, assuming that you are long in Bitcoin. And Alex and I both were just talking about this before, that, I actually might go into something that I think I've made a mistake on my trading for my long-term hold. But I'll finish this point just now. And I think this next picture really paints it a bit more clear in colored boxes, how these cycles between each halving really occur. So right now, I think what we might see, Alex, if you want to go to the next slide on there.
The colorful halving one?
Actually, go 2 down, and we'll just go to the first, second, and third halving, if we can.
Okay. Yeah.
Cool. So what I wanted to go through here is just how kind of Bitcoin has reacted to the actual halving events. So on the first halving, you can see that we had this massive run up. Things plateaued a little bit, and then we just absolutely took off. Second halving, we had a run up into it, and then things really just consolidated. They actually dipped down. And then if we were to look at the chart ongoing after this, Bitcoin did actually take off exponentially. So again, we're getting this exponential takeoff after a halving. On this third halving, I think this looks really similar. Again, we haven't got this run up that we've just had to about 8, 9K on this chart. But basically, I think it's looking similar to what's happened with the second halving. We've had a nice run up, a consolidation period. And now I really think, particularly based on being a pandemic, and this is just my personal view, everyone's going to have different views, but I think what we might see is a bit of a pull down, and then we start getting that accumulation phase again, and then we'll start going up. Now, I'm going to touch on, at this point, what I've done kind of with my trading. So I actually was lucky enough to sell out of my Bitcoin, long-term Bitcoin holding at around about the 7.8K level before the market crashed down. I managed to pick back up at the 4,500, but I was, in hindsight, a little bit silly and trying to be a bit cute, and I sold out my stack at about 5.2. So I've been sitting on the sidelines since there, watching Bitcoin rally up, and now it's got to almost 9K. One lesson I think there is, try not to get too cute with your long-term trading. We all are probably investing into Bitcoin with the narrative that it's a storage of value, that the supply is limited and the increase of supply is going down, as we've explained through that Bitcoin halving. So right now I'm faced with a position where I need to dollar cost average back in, and I'm going to be having to buy, hopefully if it comes down to 7.8K, I'll buy maybe one Bitcoin there. And then if it comes down to 6.8, 5.8, hopefully I'll pick them up. But I might be left with a smaller stack than what I was hoping to. So just a bit of a lesson there. I think me and Alex were talking about it, and Alex asked me to touch on that. It's no shame. We can't all nail trading, but that's just a bit of a lesson. If you're in it for a long term, make sure that you don't get too cute with your trading.
100%. And people message me that have got into the market just recently, like noobs, and they've obviously got in at a good price if they've been buying this year so far. And they messaged me today saying, what are we doing? Do we sell here or whatnot? And it's kind of like, guys, this is always a sort of 3 to 5 year thing. You've done really well in the last few weeks, but don't overthink it. So my rules for people are never go all or nothing. Like, you can sell 10, 20% dollar cost average out and dollar cost average in. And I'd never sell all my Bitcoin ever unless something changes fundamentally. Other ways, if you get more advanced, you can look to short, so you can hedge your position. So if the price falls, you're sort of making money to keep the total value of your portfolio the same. And we've done tutorials on options. So again, that's starting to get into the more advanced stuff, but there's easy ways these days on FTX, and there's other exchanges now, even decentralized options, where you can buy puts or sell calls if you want to defend and make money if the market goes down. So look, all that stuff's coming together. I love talking about it. It's very important for miners. I actually think miners are going to do a lot more hedging going forward and that sort of thing. So we can cover all these topics in the future, which is going to be great.
Yeah, definitely. There's an alarm going off. It's just finished now, which is good. So I just mute my mic, but it's all off now anyway.
Oh, cool. Yeah, I was going to say, well, I can't hear it.
No, I put it on mute. All good. So I think what we might go into next, Alex, if we want to go one slide up, I'll just finish that kind of point on, exactly as you said. This is the one with the green section. Yeah. Basically, as we're saying, the first halving had a 9,000 odd percent gain. Next one a 3,000. If we even saw 1/3 of that for this next halving, that could take us to a price of 77,000 USD. Now, I was talking with a couple of guys about this, and everyone's reaction was like, "Oh, that's a bit bullish." But really, if I told you at the end of the first halving, when we were sitting at around like $600 or $700 US dollars per Bitcoin, if I told you that it was going to go all the way to $20,000, you probably would have said the same thing. So history has been repeating itself. If we have look back at those cycles, it's been really accurate how it performs. Nevertheless, maybe even if we only got 500% or whatever it might be, taking us to 20k Bitcoin again, or 30k Bitcoin, then I think most people are pretty happy. So again, I'm going to be getting my exposure back in, holding for the long term. And yeah, things are looking quite exciting. I don't think there's ever been a better narrative for Bitcoin than what we're in right now. And it's exciting, a very exciting market to be a part of.
Yeah, I should probably preface what I was saying before. It does depend where we cross that halving date at. So if we're at 10,000 and 1,000% from there, that is a 10x return. So that would take us to 100,000, and I definitely think that's possible. Whereas if we're at 3,000, I would think that a 3,000% gain is possible, taking us up towards that 100,000 mark. So that's kind of what I was getting at there. I just think that this is the last really big cycle we're going to have in terms of what's achievable to get to $1 trillion market cap. There's a lot of money out there that's looking for a home. Negative interest rates, the gold story, the forex story. There's plenty of reasons why Bitcoin can see those sort of numbers. Whereas, people throw these astronomical figures around for other coins and whatnot, and there's just not a clear roadmap to get to that number. Whereas I think for Bitcoin, it's very clear. It only takes a small percent of wealth from the sort of middle and upper class, whereas we've previously had sort of tech and retail bubbles. We've never seen like serious money go after Bitcoin.
And I think it's just shame to see with the I suppose global capitulation and liquidity capitulation that Bitcoin did take such a big dive. I don't think it deserved to take it. Like, it really wasn't any fault of what Bitcoin's done, or fundamentally problems with the blockchain, or problems with the the tokenomics of it. It was just kind of people needed money to fund other investments, and they probably took some out of Bitcoin to do that. So again, it's been a perfect example how much it's rallied back. I try not to get too bullish on it, because even as I said, I'm foolishly sitting on the sideline right now. But I do think it has a really good narrative to make those highs again.
I think a lot of people are on the sidelines, and again, that's kind of healthy. If everyone was all in, that makes us more likely to have capitulations where we know people are going to be looking to buy pullbacks and stuff like that as well. Yeah, let's get through these last few slides, Will. But I'll add something at the end.
Okay,
Yep.
cool. Yeah. So do we want to go through that slide where I've got the yellow panels just quick? I think we probably touched on Bitcoin enough. The only thing that I wanted to touch on there was just that we have broken that 200 moving average. There was a significant amount of volume there. And as you said, there's probably heaps of people still sitting on the side willing to pick back up. That's a really bullish case for Bitcoin, if you ask myself. But I think that's enough for going over Bitcoin's price. One thing that we'll tap onto here, I've got a picture of the mining for Bitcoin calculation. Full disclosure, the mining store community and what Cal and I preach for, we don't focus too heavily on ASIC mining, but nevertheless, it is good to have a look at what's actually going on. Right now, ASIC miners, and I took this screenshot just this morning, they're probably quite happy with the daily return. Bear in mind that is actually about to halve. It will be interesting to look at what happens if the network hash rate comes down to subsidize so that they're still getting that return, or Bitcoin's price takes off after the halving. That's why I've put this image here, so we can have a look back at it in a month's time.
Where's that figure from, Will? I know the miners aren't making 195% a day. So what's that figure referring to?
So this one here, profit ratio. So yes, it's basically come from coin mining, and all I've put in is the 68 terahashes is what one of the miners are using. They use 3,300 watts of power, and most of the large scale miners out there would have about a 4 cent USD price per kilowatt. Okay, so what they're getting per day is around about six USD on profit at the moment. The profit ratio per day, I actually didn't notice that too much. I could have a look into exactly what that one means, but I'm confident that these profit per day figures are very accurate. It's what I've used for most of it.
Okay, I reckon maybe it's just comparing to the pool fee or something. But yeah, I don't want, when I see 195% per day, my scam alarm bells go off in my head.
Yeah, 100%. I'll double check in that we can leave it in the comments, but the figures below are definitely very accurate.
Yeah, cool.
So, yeah, it would be really cool to have a look back in a month. Technically that should be $3 if it halved in the next 10 minutes. You know what I mean? So we'll see what happens. Maybe the network hash rate drops significantly and it maintains its profit per day. We'll just have to have a look. Last thing I will mention there, Alex, which I think is really cool, is two factors leading into the halving. It is actually high water season in countries like China right now, and a lot of the mining farms are using hydroelectricity. So we might see a lot more of the network hash rate remain on with cheaper electric costs. That's one point. And the other point is that a lot of the old miners, I might leave a link in the description, or I'll give it to yourself. A lot of the old miners that have a higher power cost compared to their terahash, they might start turning off as well. So I'll touch on that a bit later, but they're just two interesting points that the audience might want to look into as well.
For sure. So next up here, we've got a few of the FPGA mineable coins.
Absolutely. So I think as we touched on before, and I always preach this to anyone that gets involved with mining or involved with mining. Mining is a long-term investment. We get too many people coming to us and they call up and, I want to get $50,000 or $100,000 worth of miners and, I'm ready to go. And often I ask them, have you mined before? Do you understand it's a long-term investment, these kind of things. So it's not always sunshine and rainbows. Not every day you're getting above, $10 or $15 per unit. Sometimes you are getting lower. But like anything, if you have a strong strategy and you really understand what's going on in the market, when things are lower, sometimes that can be the best time to mine or the best time to buy. So I'll have a look at the returns here. Basically, at the moment on Handshake, that's probably the coin that most of our community is still mining. It's probably one that I think is a bit undervalued at the moment, and the quantity of coins that we're getting is quite reasonable. I think there's a price appreciation coming for Handshake. So that's what a lot of people are focusing on. TRB Teller, I think this is a really interesting coin. A lot of our guys have been mining it previously. They've got a really cool tokenomic model where it's the mining reward is actually reducing significantly every day. It's getting to the point where it's probably not going to become profitable to mine, but definitely a coin that even after this interview, Alex, and I've got a chart on one of the next slides, I actually think I'm about to buy a larger stack of Teller with that reduction in kind of circulation coming into the market. I think that's a good one to get into. And the other point that I want to make on Teller is we're probably not going to be mining it going forward because of that reduction in reward, and that's a really good sign for traders. You want to buy those kind of coins. Digibyte, a coin that a lot of people have heard of. It's had a massive run in the past month or so, gone up a bit over 100%. It's been a really good thing for us FPGA miners because it's a large cap coin and one that we can start mining again. So the returns you can see there are pretty high. I think it could have some more legs in it, but let's have a look at some charts so we can make some comparisons.
Yep, cool.
So the first one there is Handshake. It's pulled down to about that 78% fib line. It is a new coin, and what I've particularly noticed with new coins that they do tend to pull down to around this range and then have some upside. So at the moment we're getting around 30 Handshake per day. If Handshake can push up, to that 61.8% line, we probably will sell off some of our coins. And if we're getting 30 coins and that's worth $5 today, and it pushes up, it might be 50%, then you're obviously increasing your mining returns quite a bit there. If you want to go to the next one,
I was just going to say that's such a classic altcoin that got a bit of hype about it. It doesn't quite, like, if it was a true pump and dump, you'd expect it to go all the way back and retrace 100%. Mm-hmm. A lot of the times these ones do go to these lower fibs and they get that sideways accumulation pattern, as you say, and that's a good sign. And now it needs to go up. You don't want it to dump and then just go back to where it started. And that's where the fundamentals and those other things come into it. But
100%. And it's really something that, when people get involved with the mining, just that example that they want to start big, I start them small for a reason. So they can learn these kind of things before they scale up. Because once you're scaled up, you really, if you're going to do really well in your mining, you want to understand when you're actually selling the coins or when you're accumulating them. If daily returns are at ridiculous $20 highs, you probably should sell that off and even maybe hold it in tether, wait for the market to correct, and then buy back lower. You don't want to trade in and out too much. It is a passive investment, but just having that little bit of extra strategy and understanding of where the price is for the coins you're mining can put you ahead of the curve quite substantially.
Yep, just whip through Teller.
Yeah, so with Teller, as I said, the reward, I had a screenshot, but it had a bit of private details from one of our miners, so I left it off. But let's just, for example, we were getting around about 1 Teller coin per day. That's just reducing nearly every day now. So I think it's quite a good buy for people out there. This is nothing actually to do with mining. I'm not saying mine Teller. I'm actually just giving people an insight from a miner's perspective and an understanding of the supply coming in, that we're on that lower level trend line. I think at the moment TRB could be quite a nice buy based on understanding the tokenomics of what's going on there. It's reducing substantially nearly every day. I think we were getting on about 30 FPGA miners, it was about 25 FPGA miners that we had allocated to it. We were getting about 33 coins, and then it went 32, 31. It's all the way down at 23 now, and that's over about a month. So it's substantially reducing the amount of coins going in. Could be a nice little buy for people and an opportunity for our miners who are holding Teller to actually sell off their Teller coins soon.
Yep. Next up, Digibyte.
Last one, Digibyte. So yeah, I mean, that's a really big reduction in price that Digibyte's had occurred to it. And it's in that box down below with the blue box. It's had that kind of accumulation phase and it's just broken out of it. It's about 100% gain that we've seen there. And hence why Digibyte's come back onto the radar for miners, and the returns are actually quite high for Digibyte. Right now, I have most of my FPGA miners allocated to Digibyte and Handshake. Handshake for the long term, Digibyte for the shorter term. The daily returns for Digibyte are quite high. If it can push up a bit more in price, we're probably going to be seeing some pretty great returns. But that's pretty much gives an idea of the 3 coins that we're mining, a bit more about the strategy of, looking at the price of these coins and when you should actually buy and sell them. But yeah, I mean, if Digibyte can go up another 100%, all those coins that we've been mining, we get double the returns. It's pushing us back to $10 or $15, $20 average per day. So yeah, it's a bit of insight. We'll cap over it again on the next month. But yeah, anything that you want to add on the end there, Alex?
I was going to say the timescales are cut off. So this looks like it's 105 days long, that blue section you've got. So this goes back to about the start of the year. Digibyte versus Bitcoin on the daily chart. Okay, cool. Yeah, I think it just depends on obviously what altcoins are going to do. I don't think Digibyte's going up 1,000% unless the market is in a sort of bullish condition. That's all I'd add.
Yeah, I think you're definitely right. These altcoins, even right now, they're only just coming back onto my radar. But anything can kind of happen with. Unfortunately, I do think it depends what happens with global markets. If they see that another leg down, it could reset Bitcoin, reset altcoins. But that's the whole point, that it is a long-term investment. You just got to take your opportunities when they come to sell out.
Cool. Okay, well that's all the slides we had. 11 or 12 days to the halving. I do think it will be a non-event, a lot like the ETFs, a lot like BACT, a lot like the futures launches and stuff like that. But I do think that the sort of ingredients are now there, that we've had a bit of a run to get retail a bit more interested. We've seen Google searches going up. If altcoins can have a little bit of a move the next couple of weeks, that builds momentum for people to say, what's this Bitcoin halving? So very exciting. Next month, we might try and do a bit of a debrief, like what happened after Litecoin's halving and Bitcoins in the past. We'll have a look at all the metrics. I guess, yeah, let us know. Today, we spent a bit of time on the charts, if that's something you like or you don't like. Anything else you want us to cover in the comments? And any final thoughts, Will?
No, that's pretty much it. As you said, just to set people up, next month it will definitely be a debrief on what's happened with Bitcoin. We can probably look into Litecoin as well. Post that, I think the next month after that, we'll probably go into tax time, and we probably will get Adrian on board, have a discussion about how Bitcoin miners or just miners in general are doing things around taxation. But other than that, Alex, I've been really enjoying these monthly updates, and I hope the audience is too.
Awesome. Thanks a lot, Will, and hope you guys have enjoyed that. We'll see you next month. Cheers.
All right, take care, mate. All the best.